Friday, August 15th. Hard to believe it's August, but it is. This week, chaos started Sunday night. Those of us who are true hopeless junkies, bedtime, Colorado time, 11 o'clock, comes Bloomberg with the London opening, with commentary about European markets and Asian markets, which are at midday. In this last Sunday night, a bomb dropped that China had devalued the yuan, which is also known as the RMB or renminbi, just as our dollar has terms like buck and so on. Nobody was looking for it. I had been looking for it since last winter when the rest of the world devalued, but this came out of a clear blue sky. A clear blue sky with clouds of lousy economic data from China and a great deal of misinformation about why why China would devalue the yuan. But backing away a couple of steps, I'm old enough to remember a time when most Americans didn't know there was a Fed, when most Americans didn't know or particularly care that there were currencies other than the dollar. And it's hard for me to tell now just how much information the general public has, and especially our client base. And it was clear by Monday, 10 o'clock in the morning, that the average client had tremendous amounts of information. Every news channel Monday morning, not just the business ones, but from Bloomberg branching out all over CNN and Fox and everywhere, China devalues was a top story. That in itself is a story. The important thing to know, and I don't mean to be negative about it, our interest rates have come down. We're sitting very close to 4 for mortgages. The 10-year Treasury note is the lowest it's been since mid-spring. And in the cheerful tones of a bond market guy, the rest of the world is a mess. Europe, China, and Japan, the number 2, 3, and 4 economies in the world, are in a trade war of a kind. They are all devaluing their currencies, trying to devalue versus each other, and in consequence devaluing versus us. Our economy is in a modest recovery of a kind, nowhere else to be found in the world. Nowhere. The Fed's desire to lift off from zero is partly just to lift off from zero. But there's also an economic basis in it. Our economy, if the rest of the world were just on flat footing, our economy would justify the Fed raising the cost of money here. But what's happening is the rest of the world is a mess. And the mess that they're in leads to deflation globally. We don't feel it the way a lot of the rest of the world does, but it's being exported to us by Europe and by China and by Japan. The good news, it keeps our interest rates low. It removes any reason for the Fed to be aggressive. And the cultural differences between the United States and the rest of the world are profound. We're early in a presidential cycle. We have a very long way to go, I'm sorry. And as early as we are in the cycle, the United States is a deeply impolite place relative to the rest of the world. You could be Donald Trump and elbow your way into a presidential campaign. You could be some dignified person who really wants the job like Hillary Clinton, and it doesn't make any difference who you are. There's somebody snarling and yapping at you, critiquing anything that you say, questioning all of your assumptions. The sitting government, we have a rebellion going on, everything from healthcare to the Iran deal. And those are the reasons that we are in recovery and the rest of the world is not. China is in trouble more than any other reason because of the desperate need for the Communist Party of China to stay in control of China, and it cannot brook criticism. And to be here in 2015, August 15th, 2015, and China is attempting to censor the internet, hard to imagine. But there it is, there it sits. Europe, China, Japan, a mess. Each one, and for similar reasons, exporting deflation keeps our interest rates down. Have a nice day.